All right, Central Florida real estate investors, cap funding borrowers. It's our state of the market update for May, and we're going to provide you with an update on interest mortgage rates. We're going to also give you some detailed look into the multiple apps that we use to help us with underwriting and become experts in our market and share that with you. And we'll also give you a quick update as what we're seeing in capital fundings, because inventory is up, prices are down, closings are down, national headline news, state of Florida news is negative. Some people are asking, are we seeing a crisis like 2008? I don't think that's the case, but I want to share this information with you so you have an idea and you can make an informed decision on your next fix and flip property. So let's start off with the ORRA, Orlando Regional Realtor Association State of the Market Update. Let's go through this one line by line. Inventory, this is May 2025 versus 2024, year-over-year changes. Inventory is up 35.7%. That's pretty consistent with a lot of hot markets in the United States. And we're actually seeing most markets that were healthy are now showing an increase in inventory. So very consistent, that 35% number. It's probably a national number as well too. New listings down 7%, new contracts down 3.5%. Total pendings down 1.4%. So we're getting less new listings, more inventory is sitting out there, less new contracts compared to historically a year ago, and less pending properties. So we're seeing a lot of bad inventory kind of pile up, and not many people are jumping into the market to sell their house. We'll get into that when we talk about interest rates. Median prices for ORRA, they're showing an increase year over year of 1.3%. What we're seeing in the Orlando metro area is that actually year over year, it was down 3.2%, according to numerous other sites, Yahoo, Redfin, Reventure, Altos, a lot of other sites. So we're seeing prices drop, and that's very important because we could be seeing a forecast that we'll get into of more drops to come for 2026. Average days on market up 26% year over year. Average days to sale up 16%. And check this out, we're now up to over 103 days average days to sale. Why is that? Because it's now considered 20% of all deals that get under contract will fall out of contract at least one time. That's a significant number, and that's something we're seeing here locally at Capital Fundings as well too. A lot of contracts fall out for whatever reasons. Don't let those reasons be something that you could have done. You can control a lot of those reasons. Make sure your house is renovated to the T. Maybe have an inspection done to uncover anything that wasn't done properly that will show up in the buyer's inspection. A lot of things, that we kind of, stub ourselves in the foot that we could have taken care of that'll help reduce that days on market, reduce your holding costs, make your project more profitable. And then months on supply. This is an important one as well. It's steadily over the last several months been ticking up. We're now at 5.47 months versus 3.53 a year ago. So on average, a 4 to 6 month supply of inventory is considered neutral. Anything below 4% would be considered a seller's market. Anything above 6 would be considered a buyer's market. So too much inventory, buyer's market, not enough inventory, seller's market. We're right in that middle, but now we are actually finding ourselves right up against the edge of that middle band of neutral market. So with that said, that's our state of the market. The numbers don't look great. You will see a lot of headline news for the state of Florida. So we're going to get to that. Let's now jump over to our interest rate analysis. And this is Freddie Mac's 30-year interest rate. You're going to see right now 6.77% on the 30. If you go back a month, we are at 6.81%. If you go back all the way to the year, I think it was 6.91, somewhere in here, 91%. So relatively flat. I know everyone's looking for this to change, and everyone's super excited about, the Fed's going to be dropping the Fed funds rate. Maybe it's 25 basis points, maybe it's 50 basis points. There's a 20% chance it happens in the Fed meeting at the end of July. 90% chance now it happens at one of the meetings before September. But don't be too excited, because a change in the Fed funds rate does not always correlate exactly with a change in the 30-year mortgage rate. So the correlation is not that strong. So just because we have a drop in 25 or 50 basis points, it gets a little higher once you have a 100-point drop, but we're not expecting that outside of really terrible economic news. So things maybe you want to keep your eye on a little bit more than just the Fed funds rate meetings are unemployment figures. If unemployment continues to rise, it's been pretty steady. If it rises, rises dramatically, you possibly will see some significant movement in this market. Now, again, as we've said prior, we want to see, I think ideal right now would be 5.5 to 6%. And based on some historical spread analysis for, I think, a 10 and 30-year mortgage rate, that's usually around like 1.7. And right now we're still over like 2.2% on that spread. So even if we got back to normal spreads, maybe if all the economic highlight tariffs and all that stuff kind of calmed down and we got back to normal spreads on these interest rates, we could get us down to maybe like a 6.15, 6.2, I think is what they're projecting, but still not quite to that 5.5. So we need a boost from some other places. And like I said, look out for that unemployment figure. All right, so here's an app I just want to share with everybody. This is Reventure app. We subscribe to it. We find it's a lot of great demographic information. Popular data, let's go to this. So one thing that I think is important, just so everyone gets an idea, we're going to look at metro areas in the state of Florida. We'll start off with Orlando. As we said, we had a 3.2% decrease in prices in Orlando for 2025 May through 2026 of May. They're projecting a 7.3% further price decrease. If you want to start over here at Tampa, 7.7% decrease in prices. Go all the way to south of Florida, Lakeland, 8.4, Florida Metro 7.3, that's Kissimmee, Sanford, Orlando, and then go out to the beaches, Daytona, Ormond 7.4, and drop down here to Brevard, Palm Bay, Melbourne 7.6%. So that's something you're going to want to take into account when you're valuing your next deal. How's your ARV? How's your comps? I would, one, really take a strong look at your comps, make sure you're using current comps, maybe just a couple months old, and maybe take an additional drop in your after repair value to kind of get in line with what the projections are for the remainder of 2025, 2026. And so one last app we use that we've talked about in the past and that we like so much, we embedded it onto our website. Go to capfund.com, click on market reports. It's going to take you right there. This is important because, like I said, there's a lot of headline news out there in Florida and in the US about inventory being up dramatically. Are we headed for a crash? But it doesn't necessarily mean you can't find a good deal at a zip code that you want to invest in. I know East Orlando is really hot. I know Pine Hills is got a very strong market right now. So let's take a look here. I did another video on a house that we're renovating in 32822. And let's just take a look at that report. Now this is on our website. We went to capfund.com, type in any city, any zip code in the 10 zip codes that we lend in currently, and you'll get this detailed market report. You can share it with a partner. You can just save the PDF, all as well. They're gonna give you a market action index that just gives you their proprietary scoring. There's a ton of real-time market profile data. I think this is gonna go all the way to June 27th, median list price, June 27th, and you'll be able to see kind of where this shows up on the scale to see your trends. So go down here, median list price. You can click it by market segments to try and get an idea of what quartile your price is that you're going to be investing in. So we're 32822. Let's take a look at maybe average days on the market for 32822. Our property, we think we're going to sell that around 450. So it's in between that third and fourth highest quartile. So top 90 day, upper 90 day. So let's see. Yeah. So we're going to just kind of zoom in here. Yeah. So the top is going to be here. And now we can get an idea of how our average days on the market. So you'll see it's actually dropping average days on the market. So based on this and based on this market action index, I would say that 32822 is a viable zip code, a viable area that you could invest in and not still feel the global price drops of Orlando, maybe a safe investment. So come to our website, capfund.com. Take a look at any zip code that you're thinking about investing in, provide a little insight to whether you should be investing in that or maybe taking extra caution or adjusting your numbers some. All right, so throughout the month as I'm going through all these apps, we're big believers in Altos research, we're big believers in Reventure app, we're big believers in Resi Club and a couple others that we're smart charts that we're constantly grabbing data from to share with you guys to use in our underwriting to make sure that you're gonna be profitable on these deals. But as I'm going through all this each month, I try to grab snippets from a lot of the articles and charts that I see because I want to share them with you on our State of the Market update. So here's some interesting things that I've seen. We'll briefly run through those and hopefully provide some more insight as to how that real estate market is performing. Affordability, this is a big one. Right now, affordability, the mortgage payment represents 35.3% of median household income nationwide using a 20% down payment, which is high. Most people don't use that 20% down payment. So mortgage payments represent about 32% 32 to 40% of annual income. Traditional mortgage underwriting guidelines prefer 28%. 10 years ago, that percentage was about 22%. That means owning a home today is much less affordable than it was 10 years ago. Kind of felt that, but these are some kind of frightening figures. Stale inventory, we referred back to that. Redfin describes stale inventory as something that's been on the market 60 days, and 44% of listings in April were stale inventory. I think as real estate investors that we're selling a renovated product, as long as it's renovated nice, priced substantially with the market, not too high, not aspirationally priced, as a friend of mine refers to it, you're going to get an offer on it quick. What we're seeing is that renovated homes done well get offers immediately. Non-renovated homes or homes that are renovated that aren't done well are going to experience multiple price drops and sit and struggle and then fight all that extra competition that Redfin is saying is just sitting there. You're now going to be in that bucket. So what do we want to do? We want to price accordingly. We want to price a little bit below the top of the market. We want to have our renovation done nice. I would recommend sending an inspector through that property once it's renovated just to catch anything, because if you do get your property under contract, you're going to want to make sure that you have a success rate. Right now, 20% of all contracts are having contracts fall out. So you don't want to be in that, because that resets everything. You got to find a new borrower. The market may have adjusted with more news, and then you still got to go through that inspection again. So spend the extra $250, get it inspected, fix anything that's wrong. So that way, once you're under contract, it's not going to be something that you could have controlled that's going to bite you. All right, this is going to put some numbers to kind of our Orlando, Tampa, and Miami market, because you're seeing that Florida headline news. Home sellers versus buyers. In Orlando, 19,555 sellers, 10,184 buyers. So that's a 92% differential. In Tampa, a little worse, 119%. In Miami, home of all the condos, 198% is the differential. Almost 3 times as many sellers as buyers. What is that going to mean? That means that there's an imbalance in buyers and sellers. What's next to come? Prices will drop. And here's our Orlando Kissimmee metro, 22nd largest metro in the United States. That was interesting. Miami is the 8th largest. And we've got that negative 3.2% price year-over-year decrease. Still up 48% since before COVID. So we had that huge run from COVID. That puts us now at about probably like a 9% compounded annualized return. Historically, real estate's about a 5% compounded annual return. A lot of factors contributing to this run up. We'll go into them another time. And then our last one, this is something I think is really interesting. I fall into this category too. If you've got this great rate on your mortgage, you're not moving because the differential's too much. If you're 72% of U.S. mortgage borrowers have interest rates under 5%. If you're below 3%, it's about 15% below 3% of mortgage borrowers. And you'll see these trend lines little by little. This is quarterly. Little by little, each quarter, they're deteriorating. So we are easing that burden of low interest rate mortgages, but it's not much. And it's going to take years to burn through all those people. Because right now, the main driver in people selling and buying their house, divorce, death, or a new job. So the people that their families are maybe expanding or changing and they want to sell for that reason, they're just deciding to hold steady and not because they don't want to give up that great interest rate. So like I said, 5.5% to 6% could be a sweet spot to see a lot of movement. All right, so at Capital Fundings, we're seeing positive information. Keep in mind, we're dealing with mostly fix and flip borrowers in the local Central Florida area. They're finding good markets. They're really fine-tuning their numbers, and then they're doing renovations that are going to be above average. They're going to go to the market, and they're still getting multiple showings, and in some cases, multiple contract offers, and then they're getting out of their mortgage quickly. We've seen actually a record for the past 6 months of mortgage satisfaction. So even in this slowdown, even with this huge inventory buildup, we're still seeing a lot of satisfaction. So we're still positive on the market. We've actually, bought a house and we're renovating it now. So we're going to kind of join everybody and share our findings on that house as well too. But you can't emphasize enough, don't go for that aspirational pricing, be competitive, understand your market, know what other houses are for sale, what went pending, what sold, adjust your comps accordingly, only use recent comps. One other thing, we'll do some content on this, but it's a big thing that we're seeing, especially if you're in an area that you're renovating, that you're competing against new construction. New construction developers are offering tons of seller concessions towards closing costs and even buying down mortgage rates. So we're going to talk about what a mortgage rate buy down is. It's Could be an effective tool for you to market your property. Could cost you 1, 2, 3%, but it may help buy down that mortgage for that borrower and get them to where it's pretty affordable for the next couple years, and then in anticipation of rates going down and then refinance. Remember, in the mortgage world, they always say, marry the house, date the rate. So as soon as those rates drop into that 5.5% target, could be a couple of years out, they can refinance. So could be a powerful tool that you maybe want to educate your realtor or educate prospective buyers for your fix and flip property. All right, so if you're in the market for your next fix and flip and you're looking for properties, which everybody usually is, we've got a great list of wholesalers that we work with. We're happy to share them with you. If you need financing for that project, please consider Capital Fundings. Our goal here at Capital Fundings is to make you more profitable. We want to provide all this information to you. We want to work as part of your team to give you this information, to give you our insight, to give you our opinions, our analysis, so you can become more profitable. We want you to be more profitable. We want you to increase your wealth and have fun doing this fix and flips. All right, we'll be back soon with June's numbers, and we've got a lot more content rolling out now that I've gotten through the birth of our baby girl, and I've got some more time to do some content. All right, we'll see you soon. Thanks.